Also, please make sure to keep yourself muted and your video off for the duration of the call. So, yeah. We'll just give this 1 or 2 more minutes and then we can get started. Hello. Okay, so thank you all so much for joining the call. I hope everyone can hear me clearly. My name is Ikia. I am a communications specialist with the West Africa Trade and Investment Hub. And again, we'd like to thank you all for making the time to join us for this virtual learning
De
event,
l'Ouest.
where we'll be
Je vous
talking about
remercie
lessons
de
learned from
nous
our
avoir
co-investable
rejoints.
partnerships
Nous
with
allons parler des
financial
partenariats
institutions and
et des
advisors.
investissements avec des
So I want to
institutions
just give us a
financières et
quick
des
run
conseillers
through of
financiers.
the agenda for
J'aimerais
today,
juste
and
nous
also a few
présenter le
housekeeping notes.
programme du jour et
So
également
first, we'd
quelques
like to
conduites à
mention,
tenir.
please keep
Premièrement,
yourself muted
s'il vous plaît, gardez vos
and your video
micros
off for the
fermés
duration of the
et
call.
vos vidéos
If you have any
désactivées
questions
durant
or
notre
comments for the
événement. Si vous
panelists, you
avez
can
une
leave those
question
in the
ou un
chat
commentaire
box,
pour les panélistes, vous pouvez
and we
écrire
will pass
dans la
those
boîte de
along to the
discussion
panelists
et
for a
nous
dedicated
communiquerons ces
sessions
questions aux
for each
panélistes au
panel.
moment venu.
We also have French and English
Nous
interpretation.
avons
We
les
have some of our
interprétations en anglais
panelists
et
who
en
will be
français,
presenting in
car nous
French.
avons
So if
certains de
you
nos
can
panélistes qui
go down to the
présenteront
bottom
en
of your
français.
screen,
Alors, vous
you'll see
pouvez
the
juste
interpretation
regarder au
icon,
bas de votre
and you
écran et vous
can
verrez
be free to
l'option
enter the English
interprétation.
room. So
Vous
you
pouvez
can
choisir
get the English interpretation at that time.
l'interprétation en
If you'd like
anglais
to follow
si
the
vous
event in
voulez à ce
French,
moment.
you can
Et
do the
si
same
vous
thing. So at the bottom of your screen, you'll see the interpretation icon and you can enter the French room. If you have any trouble with that, please send me a private message through the chat box. So just to run us through the agenda for the day, we'll start with welcome notes from Kevin McLaughlin, who is the Acting Deputy Mission Director for USAID West Africa. Following that, we'll have a video from the Trade Hub that covers our partnerships with FIAs. Then we'll go into an overview presentation of what the Trade Hub's partnerships with financial institutions have looked like. And then we'll go straight into panels. So we'll have our first panel and a Q&A session following that. In that time, as the panel is happening, if you have any questions, again, feel free to put them in the chat box and we will parlay those to the presenters. So following the first panel, panel 2 and panel 3 will follow that same format. We'll have the presentations and then the Q&A after, so you can have your questions in the chat box ready to go. And then following that, we'll have closing remarks and our event will be finished. If you have any trouble at any point during the event, please send a private message to me so I can help you out. So yeah, without much else, I will pass this on to Kevin McLaughlin, who I believe is on the call to give us welcome notes.
Hey, thanks very much. And really big shout out and word of thanks to the Trade Hub for bringing us all together today for this important discussion. You know, when the Trade Hub launched in 2019 at the height of COVID, businesses really had a tough time, and particularly with access to finance. You know, I think it was a really very difficult time just for making deals, for making contacts, and access to finance. You know, it was a perennial problem for smaller businesses, but particularly in that very difficult time, it was exciting to see how USAID's financial partners, the financial institutions, and advisory firms, many of whom are with us today. So in Jaro, I understand Synergy is with us today, the African Guarantee Fund, Cross Boundary, Open Capital Advisors, She Equity, Port Aid, and I guess there are some others who couldn't join us today. But all of you really rose to the challenge, and you made more than $17 million available to small businesses in a very, very difficult time. So together, I think we were able really to unlock the potential of some of these businesses with their hard work. And so I think I'm just looking forward to hearing more about what you did, how you did it. And I'm really grateful to colleagues who could join us today so that we can share some of these lessons that maybe can be used in other parts of the agency. So with that, I'll turn it back over to you. But I just wanted to again say many thanks for all the hard work over these years to make financing available, and thanks again to the Trade Hub for bringing us together. Over to you.
Fantastic, thank you so much. So as we saw on our agenda, the next item we have up is a video. So just give me a second while I pull that up.
suis Abbé Champori Yoda, directeur général de Groupement SA, qui est une société de transformation et de commercialisation de riz local basée à Bagré, au Burkina Faso. À partir de 2022, grâce au partenariat avec Synergie Burkina, nous avons pu accéder à des financements pour notre fonctionnement.
What we want is to export Africa. Our mission, bridging Africa and the world by building the global infrastructure for African commerce to succeed, is what is, in our opinion, the best way forward to develop.
Depuis 2020, après le Covid, Greenavinova a eu des difficultés où notre chiffre d'affaires a complètement chuté. À partir de 2022, par le travail que Cross Boundary a fait avec nous, l'étude de marché, la mise en place d'un cahier de charges clair avec leur accompagnement pour nous appuyer sur notre plan d'affaires, nous avons pu avoir alors un concours financier auprès de la banque IB Bank qui nous a financé pour la campagne 2022-2023.
Je suis Taye Aline, CEO de OAFA. Je suis basée au Nigeria et j'accorde des prêts pour les femmes. Voici mon marché. Je suis très heureuse.
Through this investment, we were able to grow our loan book and provide loans of over $200,000 this year, provided jobs for almost 200 people, improved our market entry and our research and development.
All right. Thank you all for your attention for the video. Up next, I will be introducing our next speaker. He's the Deputy Director of Public-Private Partnerships here at the Trade Hub, Mr. Charles Paulette, to give us the presentation for the Financial Institutions and Advisors Overview. So over to you, Charles.
Sorry about that. Yes, thank you very much, Nana. My name is Charles Paulette, and I do work with the financial institutions to ramp up their operations across West Africa. Allow me to just share my screen. Okay. Right. Okay. So a lot of clutter on this Zoom thing. Okay. So the USAID Trade Hub Investment Project is a 5-year project that covers 18 countries in West Africa. And the goal here, pardon? And the goal here is to basically promote co-investments in the region by attracting foreign investors into financial funds and also support the work of the advisors. And through these capital, basically they would be investing in the SMEs to catalyze the sales and job growth and exports. For the Trade Hub itself, we have partnered with 92 institutions across the private sector spectrum, from large capital or large corporates to startups, engaging $84 million in committed capital. And these partners engage across over 30 value chains to generate key indicators for USAID, namely exports, private capital, jobs, and sales. Now, the way TradeHub works is that we provide these co-investment capital across 3 pathways: direct to the SMEs to basically co-invest in their working capital and capex. We de-risk the financial institutions, such as the investment funds, using investible first loss, which you'll hear about, as well as the first law, as well as the cash collateral. And for the third pathway, we facilitate financing by providing pay-for-results engagements with key advisors. And to your right, you will see a very broad mix of these partnerships that range from plastic recycling in Cote d'Ivoire to Synergy in Burkina Faso, as well as Cashew in Benin. Now, the grant products that we use for the financial institutions, as noted above, included investable first loss and cash collateral. Now, what are these products about? The investable first loss was structured to address the pain point that some of these funds are having in West Africa, namely the lack of track record, as well as pull-in to pull in the fund investors into West Africa. So the investable portion would allow these fund managers to accelerate their building of the track record in West Africa that they can market to fund investors, as well as use the grant capital from USAID as a first loss to further de-risk their participation. And with that, the outcomes included 4 funds being launched, as well as 2 facilities. On the cash collateral side, this includes a portfolio already managed by the advisor or the fund, such as Injaro and Synergy, to basically facilitate working capital for their SMEs, therefore de-risking their equity investments or creating track record to basically launch their future funds. And finally, to the right, as noted above, pay for results, or these are structured with the advisors to allow them to basically focus on key sectors or key countries to build the investment readiness of some of these companies, if not for TradeHub, but after post-TradeHub or after or post-TradeHub, as well as to monitor the track performance of the SMEs. Now, for the investable first loss and cash collateral, what we've also done is any unused portion of these de-risking capital would be recycled into the future fund as permanent equity, therefore extending the impact of USAID's engagement in the region. So what's the performance? As noted by Kevin previously, these partnerships were initiated during 2019, and now 3 years later, what are the outcomes of these results? So to the right, you will see the performance overall of TradeHub, and to the left, it presents the data so far that we have from the FIs. Now, the data continues to be reviewed. It's an ongoing review. You will see in the presentations after this that the exports were about 60 million, as well as the capital over 80 million. Now, these data sets will be under review for potential approval. What I also want to note is that with the FIs, through the FIs, we have reached over 11 countries, capitalized 74 SMEs, excluding AGF. AGF is a guarantee fund that basically has an outsized impact across the region. So excluding their performance, we have reached 74 SMEs indirectly through the FIs, through the funds, and through the advisors. Now, these SMEs are engaged in climate. They've built factories and assets, as well as they export and are active in food security. So what are the key learnings having engaged with the FIs? One, the average tenor of their performance was 30 months, and this happened during one of the most unprecedented global risks, which includes a global meltdown of financial markets for the startups in the US, triggered by bank failure in the US, to coup d'etats or instability in West Africa. So for these funds, for them to be launching new funds, it took time for them, one, to either register or launch, but as well as immediately engage their investees or potential pipeline for investments. Now, one other risk that we may have is that because we are not investing directly into the SME, we are a bit of a distance from the actual results of the SME, which is what USAID would like to catalyze and support. So what we're now trying to discuss with them is to basically continue to report on the SMEs, as well as we'll hear from them for some of them that they're using technology to actually fix this data quality for future engagements. And with that, I'd like to transfer to go to the first panel, which is for the investible first loss. And we will start with Injaro Cabo Verde with Joel. Thank you very much.
Hello, good afternoon. It's Joel here. From what I gather, the presentation is going to be shared, is going to be projected centrally as I speak, or should I then share my screen and project it from here?
Go ahead, Joel. You can project your own screen.
Okay. So I gather everyone's seeing my screen at this point in time.
Yes, Joel.
Okay, lovely. Well, good afternoon, everyone. As Charles said, I'm João. I'm with Injaro in Cape Verde. Just give you a little bit of an overview of what Injaro's been doing over the years. Injaro is a Pan-African fund manager with operations in several West African countries, from Ghana to Cote d'Ivoire, Senegal, Kenya, and now here in Cape Verde. Been around since 2009 and worked with, up until now, around about 8 or 9 very strong partners in the DFI space. And as from 2020, end of 2021-22, partnered with USAID, which helped bring along Pro Capital and launch the Pro Impacto Fund here in Cape Verde. Pro Impacto Fund and another fund which was launched in Ghana, IGVCF, sort of marked the transition in strategic terms from Injaro from being a exclusively agriculture-oriented fund manager onto a more agnostic and diversified strategy. For operations in Cape Verde, Injaro set up a local subsidiary, of which I'm the country manager, which is ICP. And as ICP, we embraced the challenge that put us upon with a partnership with Trade Hub and launched a local Cape Verdean-focused impact fund, which is called Pro Impacto. Again, this happened as a response to the post-COVID situation in Cape Verde, and again, the lack of opportunities and the lack of financial instruments and scarcity of access to capital for some of our SME fabrics. The idea was to launch an impact fund of $10 million, of which USAID came in with an investable first loss, which then anchored and catalyzed investment from Pro Capital, which is the state-owned Cape Verdean venture capital business that brought in $3 million. We are now actively still fundraising as we invest. In terms of targets, basically the idea was to catalyze on that and attract up to $12 million of direct and indirect investment and generate a number of jobs for women and children.
Sorry, Joel. We're not seeing the slides move.
No.
Are you on slide 3 or 4?
I'm on slide 3. You should be seeing it. Yeah, I'm on slide 3.
Do you mind just pressing F5 or just to basically blow up the slide?
Yeah, I'm there. I mean,
okay.
I've got it.
We're not seeing. We're not seeing it actually.
On presentation mode.
Okay, it's not moving.
Well, could you just stop sharing and then reshare? I think that should fix it.
Okay, that's fine. Yeah.
Yeah.
Ready when you are, Nana.
We're not seeing your screen, by the way. Would you like me to do it?
I'm waiting for Nana to share the screen as suggested, and then present it centrally.
Okay.
Sure, give me 1 minute. Okay, can you see my screen?
Yeah, I can indeed.
It works.
Okay.
Yes.
Okay.
Perfect. Okay.
So we were on slide 3?
Yes, I was on slide 3, just wrapping up on slide 3. So as I mentioned, the idea was to launch an investment facility here that would help SMEs reach access financing. We had, as Charles mentioned initially, we had a few struggles and challenges because of the novelty of the concept. You know, it's the first ever private equity fund in Cape Verde. So even the fund manager had to be set up, which obviously brought along a bit of tardiness in terms of licensing and setting up the infrastructure, and then getting the SMEs to warm up to the concept of private equity. We managed to conclude 4 transactions in companies ranging from technology down to poultry, pharmaceuticals, and aquaculture. In this case, a shrimp farm produces the first shrimp farm in Cape Verde via aquaculture production. And we deployed just under $2.2 million in direct investment, which catalyzed another $2.5 million in co-investments, and predominantly under debt raising by financing with local banks. In terms of sales, we've managed to reach something in the region just under $7 million of sales. Next slide, please. The main challenges we had, again, were evolved around the regulatory compliance and what we call the investment readiness. You know, a lot of these companies had the concept, had the idea, but weren't at all ready to be invested in. And in terms of fundraising, albeit we had first loss investable tranche from the Trade Hub and USAID, and the investment from Pro Capital, a lot of the DFIs still want to see, investment performance and fund and a track record for a fund which is a novel fund. That wouldn't be possible. We learned a few lessons, especially in terms of the target setting up and the, managing the, if you like, the expectations both from the investees and from our own investors. And one thing that we've noticed is that in the case of Cape Verde, at least, institutional support is paramount for us to get, successful fundraising. Going forward, things look quite interesting because we managed to put together a pipeline of over 70 companies, which will allow us to conclude a couple more transactions before the end of this year. And in terms of long-term sustainability, both from pro-impact fund point of view, as well as from the investee companies, things look quite optimistic going forward because it's now a concept that people grasp a lot more solidly. And so the tendency is going forward, things to move faster and for us to, be able to reach a wider number of SMEs with investable funds that we have. We've, as part of our growing strategy and fundraising strategy for this fund, we are now launching a Pan-African fund, a regional fund with a Francophone and a Lusophone footprint and investment focus that will, in the case of Cape Verde, attract investments for the pro-impact fund, fully capitalizing it and enable us to get the 10 million that we reach. For us, it's been an immense pleasure to work with Trade Hub and USAID. We've learned a lot. We were subject to a lot of support. There were moments of pressure, obviously, but support was always at reach. And from a Cape Verde point of view, it brought in a different asset class, which I believe is here to stay. Because people are now talking about the possibility of launching other private equity funds in Cape Verde. None of that would have happened without the support of USAID in this initiative. Thank you very much.
Thanks, Joel. That's a very, very insightful. Let me introduce the other panelists for this first panel, which is the investable first loss. After Joao, I will be presenting Han, who is leading the coordinated investment management. After Han, we will hear from Gemma of Organic Development Finance. And after Gemma, we will have Pauline present on behalf of She Equity. Next up, to Han, would you like to introduce yourself and your presentation, please?
Yes, of course, Charles. And thank you, Charles and Kevin, for your introduction words. It's really encouraging to see what impact the Trade Hub has had in the past years, especially in light of the challenges we have all been confronted with. I think it's good to exchange and capitalize on the lessons learned. So thank you also for organizing this webinar. My name is Han Verheijen, Managing Director of Coordinated Investment Management, and I will share my screen. Give me 1 second. Charles, can you confirm screen is online now?
Absolutely, we see it. Thank you.
Great. So Coordate is a development organization active in the most fragile countries on Earth, basically with health program, security and justice program, emergency aid. But 25 years ago, Coordate also started with impact investments. And in the past 25 years, we have gained experience in the most fragile countries, like our mother company. And we had feet on the ground already in Sierra Leone and Mali. So we had some experience there, investing with Coordate's capital. But we wanted to grow our assets under management in order to create more impact in those fragile regions. And for that, we wanted to establish a fund that we named the West Africa Bright Future Fund, which aimed to focus on 4 very fragile countries in West Africa: Sierra Leone, Mali, Burkina Faso, and Guinea. And we focused on relatively early stage SMEs, active in climate, job creation, agri, and wash. Now, in order to attract money, that was quite challenging because the perceived country risk is quite high, and investing in early stage SMEs is quite a high risk. And we're really grateful that USAID came on board with the West Africa Trade and Investment Program with a 2 million investable first loss grant. And next to another grant we had a first de-risking layer of 3 million. And that gave comfort to investors joining us in this West Africa funds. Next to the first loss, we also got a credit guarantee from the DFC. And there was an extra de-risking layer that gave comfort. So based on this, we were able to welcome 6 external investors and really to launch the fund. And in the meantime, we have made 18 investments in Mali, mainly in climate, job creation, agriculture, and 1 in the wash sector. So the portfolio is running right now. If you look at the results, then you can see that the main focus of the fund was on job creation with gender lens and a youth lens. And but I would like to zoom in more specifically on the key lessons that we have learned. And we summarize them with 3 key lessons. Firstly, if you service SMEs, we have the opinion that you need to have local presence and feet on the ground in order to monitor, be really close to your clients, and also be able to support your investees. Because there's one thing for sure, they are challenged. And it's good if you are literally next doors and be able to support them. So that is one important lesson. Next, we have all been confronted with COVID. In the countries we were active in, there were coups d'etats. And it is critical that you're able to be quite flexible as an investor and in order to support your investees and be creative in the payment terms. So we build in grace periods for our clients because it takes time to generate positive cash flows. We try to match the repayments with their cash flow movements. And we were quite flexible also in long-term financing because it takes time to build positive cash flows. So that was the second lesson learned. And then thirdly, in the countries that we are active in, there are hardly any investors or financiers. So local banks are only willing to bring in working capital. There are a limited number of lenders, and there's hardly any equity available. So the equity that we brought could consider as quasi-equity. And we basically would like to encourage all investors to also test the water in the more fragile countries, because the impact that you create is really critical, I would say. And you create markets in those countries by investing there. Just to mention two examples before handing over. In Sierra Leone, we provided a significant loan to Capital Foods for their capital expenditures, and they were able really to grow their operations and now are at the brink of exporting to Liberia. And in Mali, in Mopti, a fragile area, we supported Soportilat, a rice milling company, with their new rice mill. And also they are about to export to Mauritania. And let me conclude by, basically encouraging all that it is very rewarding to invest in these fragile countries and to support early stage SMEs. And we believe there are ample investment opportunities, especially in climate and clean energy, in agriculture and in the wash sectors. And in the past years, our SMEs have proven that despite of coups d'etat and despite of the challenges of COVID, they have been able to return a large part of the investments. Something I wanted to share, and I'm glad to hand over to my colleagues of ODIAF, if I recall. Thank you.
Thank you, Han. Appreciate it for your presentation. And next up, we have Gemma of ODIAF. Gemma, would you like to introduce yourself and share your presentation, please? Thank you.
Yes. Hello. Good afternoon, everybody. I hope you can hear me okay. I will see if I can share the presentation. Is it visible?
Yes, it is.
Right. And let's see if I switch screens also slides. You can see the next slide.
Yes, we're also seeing the notes below. Would you like to expand it to your, yes, there you go. Perfect.
Oh, all right. So here we are. My name is Gemma Verhoeven. I'm going to talk about the Organic Development Finance facility that we are managing as FOUND for almost a year. So FOUND is an impact investment advisory firm, and in Amsterdam we manage multiple funds, and Organic Development Finance facility is our most recent addition. And I think it's very much aligns with the principles of FOUND, where we are trying to create impact in emerging markets in sectors that are facing a finance gap and that are really relatively underserved in the financial markets, and we see room for additionality. So we don't aim to crowd out investors, but to crowd in capital from private parties to reach these sectors. I'll explain a little bit how it started. Organic Development Finance Facility was set up and initiated by one of the largest traders in the Netherlands, Trident Organic in the Netherlands, who saw the need for funding in their supply chain. So Organic Development Finance Facility is a fund at arm's length operating from a trader partner that is Trident. But I'm sorry, I'm a little bit distracted for a moment. I'm going to see if I can change position a little bit. Sorry. Let me catch back on what I'm trying to explain. It is in the name of Organic Development Finance, so it is impact about reaching SMEs with a financing gap, but very much also the organic part of growing the sector as a whole. The premise of the fund is that organic farming has environmental and social impacts that are worthwhile to scale by improving soil quality, which in turn brings resilience to climate change, reducing pollution of water and land, improving or helping preserving biodiversity, and creating a safe working environment. And with that, also improving livelihoods. So more farmers that are active in organic sector can create safer working environments for their staff, for their families, and improve income. So it has lots of different impact KPIs that we're trying to reach. And the fund is set up about making this process as efficient as possible, trying to work with traders that are active in this organic commodity trading. There's typically already long-term engagements by traders in this field. So, for example, Trident Organic is very much engaged with the suppliers, trying to build capacity in scaling up, making sure that they are certified, making sure that they are meeting quality standards. And then the final part was the financing. These aggregators of organic commodities need to pay the farmers at the gate, and then do some processing, packaging, logistics, ship it, and then get paid maybe 3 months, 6 months, or 8 months later. And so this is a financing gap that ODF is trying to fill. To allow these aggregators on the ground to scale faster so that they have working capital available and that they can immediately pay lots of farmers when harvests are ready, and not have to wait to sell it first, receive income, and then pay for the next batch. So the premise is really to accelerate existing partnerships that are there, and that ultimately it grows the total sector of organic farming. Yeah, we have been launched 2 years ago. We've managed to do 10 transactions since then with 7 different operating companies. They are mentioned here. And maybe unlike some of the other funds that are presenting here, ODF is a global fund. But with the help of West Africa Trade Hub, we managed to really focus efforts also on finding SMEs and partners in West Africa, because among the different suppliers and commodities that are grown worldwide, it was recognized that maybe in West Africa, additional support is needed to make sure that buyers and investors are willing to engage with partnerships there and taking the risk to invest and have a long-term view of successful businesses in these countries. So it is a blended finance facility like many of the others, and USAID was really catalyzing in that sense, allowing the fund to get started with making these investments. I've heard it before also from my colleagues already mentioning, as a first-time fund manager, you need track records and to show that the investment case is worthwhile. But how do you do that if you don't have capital? So the funds made available by USAID were critical in that sense for us to get started with making those investments, specifically in those markets which had the highest perceived risk in West Africa. And so we're really pleased to have gotten to this point where we were able to make these investments. Out of those 10 transactions, 6 of them were West Africa to 3 individual SMEs. I have to say, in that process also, actually, we worked with a double amount of that. So at least 6 SMEs we've tried to fund and bring up to final approval or even contracting phase. But circumstances also show that this sector and part of the world is dynamic. And so for several reasons, those investments did not materialize. And so it only shows, I think, how difficult it is to make successful cases. But we are very excited that after this first period of 2 years, that we've now managed to attract the first largest senior debt funding to the facility. We are about to close a loan agreement with one of the investors in the Netherlands active in emerging markets. And with that, I think to show more impact and show more track record. And from our market sensing, actually, we note that there's quite a lot of interest in joining us on this venture in reaching organic aggregators in emerging markets, amongst which a substantial part in West Africa. These are some case examples, maybe to show for the audience here today that we in West Africa, we were able to support companies in Sierra Leone, in Burkina Faso, and in Togo. And like I said, 2 of them, Labrador and Sierra Leone, we were able to finance twice. So we had 1 successful loan, 1 season, allow them to scale, to sell the products and receive revenues, and then to be able to do it again the next season. Depending on the product a lot, these KPIs are difficult to predict. So for Sierra Leone in cacao, you'll see 26,000 farmers, where I think at least as impactful was Sanlé in Burkina Faso, but the number of farmers is smaller. But you'll see the impact that we made there together with Traden is really increasing their capacity amongst others, and to be able to ultimately then serve a lot more of farmers. So we are very proud about these results and excited about now onboarding the next step of ODF by really scaling the fund further, attracting further capital, and then be able to replicate and scale the results that we've had so far. I'm running maybe a little bit out of time, but a few of the topics, of course, of today. What are the challenges? Some of them I've highlighted already. It takes time to be fundraising, while at the same time building a track record with limited funds available. I already highlighted we are providing working capital loans. So we provide a loan that needs to be repaid and then put back to work again. So in order to be able to do this, you need liquidity forecasting and to be sure that you have funds available that you are promising. And so if the fund size is small, this is quite complicated to do. So we're really grateful for the support that we had and excited that we are able to scale up quickly now. The sponsor risk in this sense is that we were very much reliant on Traden Organic, who initiated the funds, who had some reorganizations itself, and then it shows that it also had its effect on the fund and it slowed down the performance. So while we are now about to scale with additional investors coming in, we're also about to diversify with several of these international buying partners joining our fund, so that also if one of them maybe is less focused or busy with other things, or engaging in focused activities, that we can diversify across
Nous puissions nous concentrer sur certaines activités, plus particulièrement les activités sur le marché, et travailler également avec des partenaires.
But I already highlighted our outlook is favorable. We are excited that we are about to accelerate and
comme nous l'avons dit plus tôt, nous sommes sur le point d'accélérer notre impact. Alors, nous allons vous tenir informés. Nous en
the fund to scale more. This is it.
Thank you, Gemma. Appreciate it. And next we have Pauline. Pauline, thank you, Gemma, for the presentation. Pauline, just to politely remind you, we do have a lot of presenters as well. If you don't mind, just giving us a very brief presentation. Appreciate it. Thank you. Over to you.
Sure. Can you see my screen?
That is correct. Yes, we can.
Okay. Hi, everyone. It's really great to be here. And thanks, Charles, for reminding me about the time. I tried to go through this very quickly. Just a very high-level overview about share equity. So my name is Pauline Kerber, and I'm the managing partner and the founder of Share Equity. So I launched Share Equity in 2020, and right now we have done 10 investments, and 7 of which are in West Africa. And in terms of sector, officially we're sector agnostic, but we have a priority areas including the agro-allied, climate, consumer goods, tech-enabled solutions, including healthcare, mobility, and finance. So really, why do we exist? We're really there to focus on strengthening the ecosystem for women entrepreneurs. And we do this through networking, capital, and business support. On the right, you see some of the example of the portfolio company we have in West Africa. Our positioning and our strategy is really around taking the ecosystem approach to investing. And what we mean by that is really combining a de-risking mechanism through SHIBA, the Share Equity Business Accelerator, and the fund, and putting the women at the center. So we are all about supporting women-owned and led businesses, really about working with them so they can create wealth for themselves. Because also we know that the trickle-down economics are very rare in terms of impacting everyone. So when we start engaging with Trade Hub in terms of this collaboration, we highlight the fact that we were there to address the 42 billion gender funding gap in Africa, which is even more stronger in West Africa. We were highlighting the fact that there's a limited investment readiness program that really, crafted, keeping in mind the needs of female founders in West Africa. And also the lack of investors who look like me, because the saying goes like, usually the funding gap the female founders have on the ground, it's also linked with the struggle of fund manager who look like me have trying to crowd in other investors, mostly coming from outside of the continent. So the solution for us was working with Trade Hub through this partnership to get this 1.2 million investable first loss, but also TA facility, where we could, leverage this to attract private investors and also work with 120 female-owned and led businesses to de-risk their businesses and get them to become investment ready. So this partnership with the Trade Hub and USAID allows us to scale our ecosystem strategy and actually demonstrate what we mean by ecosystem investing. The key outcome results includes basically supporting 120 women-owned and led businesses, investment that we made about 4 during this partnership period. The job we created, which is 225, and our target, as you can see, was 200. Private capital, I will come back to the challenge. We didn't really manage to reach the target for the same reasons that everyone have highlighted here. And then in terms of a participant, we actually really reached more than we assumed we could reach. And I wanted to share with you here the example of Wafara, because this is a very specific example that shows how our imagine initially de-risking mechanism and linking that de-risking and investment worked. So Wafara was one of the participants through SHIBA. When she came in, she has never raised money. She was looking for raising money like every other woman who tried to enter an accelerator. At the end, they're actually looking at a pathway to accessing financing. So she stood out right away because she would do her homework, go and do the market testing as required through the program. And within half of the program, actually, she was able to come back and report that she has doubled her sales. So we kept working with her, coaching her, supporting her. After, working with her, watching how actually she knows how to execute, she understands the market. She's the kind of founder with the fire that we want to fund. So we are invested in her, and we also assigned 2 advisors that have been working with her. So now she is ready to scale her businesses. We're actually supporting her to work on the next, fundraising targets, but also looking at how does she navigate the complexity in markets, market shock, and the risk we're seeing in West Africa. So the challenge is, again, given the time, I'm not even gonna bother you with going through all of them, because actually they really align with what everyone has said. Market, startup risk, linked to the governance and investment readiness, which we're trying to address, but also realizing you need more than a program. You need also to have that pre-seed injection to help those founders address some of the issues that you will have identified during the program. One particular challenge we had was also the grant process took longer, which meant by the time we signed the agreement, we didn't have enough time to execute. And also as a first-time fund manager who also looked like me, the challenge have been rare in terms of being able to secure the funding I need, mostly working capital, and hire the right talent, which we need to position ourselves and attract other institutional investors. Key highlights for us has been Sheba's success. The feedback is really good, and we know how we can take this further. In fact, as a part of the success story, Sheba just got a funding from AFAWA to focus on agribusiness. So my partner, MBC Africa, led by Anna, is now launching an agri-focused Sheba program to basically deep dive into how we handhold women in agri business. Outlook looks good because we are in the process of onboarding other partners to join me. I have been so far a solo GP, so now I have partners joining me. We're also changing our strategy to basically draw from the lesson learned around the type of structure needed to really address the challenge of this missing middle that we're focusing on. So we think evergreen structure is the right structure, but also aligns with the kind of investors we've been talking to. And we are looking forward to working with USAID to report because, as I mentioned, the key challenge we have had was a time. So we took longer to complete this agreement, which we feel like it has not really allowed us to demonstrate the potential for systemic investing in this ecosystem approach. So we're looking forward. And I wanted to also thank you very much, the Trade Hub team. Been amazing working with you guys, realizing that there are some institutions out there that also work the work. So the business we are in is about backing female-owned and led businesses. And one of the complaints many founders have on the continent and also including West Africa is African female founders are over-mentored and underfunded. So through this collaboration, we've been able to demonstrate that Trade Hub, USAID, understand that it's not about mentoring, it's not about empowering, it's about unlocking the capital those female founders need to actually go out there and create impact and the financial return that the continent needs to be able to actually seize its opportunity. So thank you very much. I look forward to interacting with everyone and continuing this collaboration. Over to you, Charles.
Pauline, thank you very much for that closing and for the presentation. I now open it up to Q&A. I can start the set of questions for the 4 panelists that use the Investible First Loss. And the first question that I have goes for all of you. We all know, West Africa is extremely diverse. There's no one size fits all solution. So in your view, what is the appropriate size for a first loss in West Africa? Now you can be very specific. You can say, this is the kind of first loss that we need for the ag sector or for certain countries. I'll defer that to you based on your experience. Let's start with Han. Han, what's your take on the size of an appropriate size for a first loss? Thanks.
Thanks, Charles. Yeah, indeed, West Africa is really diverse, and the size of the first loss depends on the risk, basically. And if I speak for the West Africa fund that we launched, then we had a first loss of 10%, and that gave comfort to the investors to step in. So my guess would be 10% for a relatively fragile fund, and a slightly lower first loss if the risk is perceived lower.
Thanks, Han. Gemma, what about you? As you're launching this new fund, supply chain fund. It's a global fund, pulling in your institutional lenders, and again, you're focused on these organic SMEs, very agro-specific. What do you think is an appropriate size for a first loss?
Yes, thanks. Yeah, I think indeed on our side that we see also not only the geography as a risk, but the sector and the agricultural sector in itself, and then specifically organic, which maybe has risk mitigations, but also additional risks because you need to meet the certification, otherwise you cannot sell. So definitely, I think a market that is less known and needs additional risk capital. So we see a first loss. Meaning in our fund, we see a blended structure where about 20 to 25% of buffer is needed before senior lenders come in. But then within that buffer, we can still distinguish concessional mezzanine loans and first loss, where I think the first loss indeed could be around 10 to 15%. But this would again be on a global facility. And that is, I think, the nice part, and actually among the discussions that we are having now, where maybe if we would do West Africa specifically, put that at 25%, there's also diversification in our fund across geographies. On a fund level can be lower because part of the risk mitigation is in fact in the diversification of geographies beyond West Africa. So yeah, I think there on a global fund it can be a little bit lower.
Thank you. And Pauline, what about you in terms of your gender focus and also you're spread out across Africa, but if we were just again focusing on West Africa, especially the Francophone, promoting gender lens investments in Francophone, what do you think is the appropriate size of a first loss?
I think I'll go more with the game, but between probably 20 to 30, and I increase the range because also within Francophone countries, if you look at a country like in Niger and Mali, the risks are double down, right? So, but also it's looking at how far the company is. If the company has never raised money, it's a woman-owned and led businesses, Francophone market. It's not so much about also the actual risk, it's the perception of risk. So that adjustment of the size is really looking at what are other activity you need even to do to take away those perceptions that makes risk-averse investors see that there's a market they can come in and play. So yeah, so 25 to 30%.
Thank you. And over to you, Joao. Again, Cabo Verde, very small market, 500,000 people. Again, there is a promise to regionalize this across the Lusophone project. What do you believe is the appropriate size for a first loss?
Well, I mean, obviously the size of the size and the nature of the market are quite important, as is as are the sector considerations. But I believe here we also need to add the actual nature of the fund. I mean, if you're talking about a debt fund, I believe something around 5 to 10% as a first loss would be adequate. Equity funds, a private equity fund, I would go a bit further than that. I would go between 10 to 15% of the fund size as a first loss, because it will give your investors an added level of comfort, I suppose.
Okay, appreciate that. That's a very good insight. Now, given the time that we have, I won't be able to ask a lot of questions. I also want to make sure that the audience can pose their questions if they have any. So feel free to type in the questions that you have. Now, I want to just go straight to one-on-one here. Han, your parent organization, Cordaid, is very much focused on humanitarian impact. And there's a lot of talk about how impact investments have really matured when we're hearing institutional investors in New York, big names basically talking about impact investments. where is the next frontier when we're talking about impact investments in the context of West Africa?
Let me start by saying, Charles, that we shouldn't mix development work with impact investments. These are really two different ball games, but they can somehow strengthen each other. And coordinated investment management follow this mother company in investing in fragile contexts. And your question reminds me of an exercise that we did a few years ago where we plotted all African countries, not only West Africa, but all African countries in two axes. On one hand, the opportunity to be successful, and on the other hand, the attractiveness. And these were based on really statistical data. And based on these data, we ultimately concluded to bet on Mali, Burkina Faso, and Sierra Leone. And in the meantime, these countries have proven to be fragile. But I would say these are actually the next frontiers in the perspective of West Africa. So there's hardly any impact investor there. Few opportunities to invest. So I would bet on these three countries: Mali, Burkina Faso, and Sierra Leone.
Thank you. I have a question to ODF. Again, many of these countries, I think, as you're pulling, as you're leveraging the natural or the natural state of organic, right? Natural organic state here in West Africa, based on their lack of access to fertilizers and GMOs, for instance. I would like to know from, what's your perceived risks, right? Perceived risk in West Africa, and how as you're onboarding these investor buyers to basically, again, leverage the strength in West Africa for the organic supply chain. How are you convincing them that it really is worth investing or connecting with West Africans' organic suppliers? How does that, can you just talk to me about the evolution of their thinking, their evolution of their perceived risk, and your role in basically shaping that? Thanks.
Yes, thanks. Yeah, I think, good to highlight that to a large extent, we follow those international traders in their supply chain, but of course, we try to help them mitigate risks. And so I think you alluded already to the fact that many of those countries and commodities growers are organic by default because of context. And so I think that is a big pro and to highlight. And I think beyond that, I think we try to mitigate risks surrounding such a transaction, such that what remains is really the partnership between a supplier and a grower. And so in international trade, there's lots of insurances and models to make sure that that transport and logistics doesn't stop you, that ownership is transferred legally, properly upon handing over of documentation. So these type of international mechanisms already in place mitigate large part of the risk also for West Africa. And so I think, that's what we try to do, to have those investors focus on the product and the suppliers and the quality of the goods, and to mitigate anything that can distract them from that, which could be related to the country. So currency risks or so in the structuring of our facility, I think, focusing on dollars, on insurance, on logistics, on proper documentation. So wherever feasible, at least mitigate any of the other risks there to make it accessible as a whole.
Thank you. Now, again, within the same context of the risks and associated with the first loss, my question to you, Pauline, right? So you spoke about restructuring your fund into an evergreen fund. Perhaps can you just talk a little bit more about considering the size of the challenge, right? For massive gap in gender funding. Perhaps can you just share with us as the evergreen evolutions, or what is exactly the right structure or the right fund structure or intervention in the market, again, promoting GLI in West Africa?
Thank you, Charles. Well, I don't know if I can say the right structure, but I can. But I can speak about a structure that could at least match the needs and be flexible enough to respond to the type of to use the type of instrument we can use. So the evergreen structure, just for clarification, it's basically a permanent vehicle where there's no time limit to when you must close it. And the benefit to this is one, you can structure different exit options for different investors, which then address this long-term. Some investors are like, I don't want to put my money in and then wait for 10 years. So there's that flexibility of different level of exit, which then allows you to attract a different type of investors with different type of risk appetite. Obviously, what we're looking at as well, it's an evergreen tied also to TA facility, because if we truly still want to be that company, that fund that is funding the missing middle, you still need to have an aspect of hand holding. And right now, there's no structure that allows you to actually raise the money which is a part of the fund, and then you hand hold. It's usually a side link TA facility. So between that, the TA facility and the structure that can give a confidence to investor that you can exit different time, but also you have this long-term horizon where if you have a healthcare company that needs more time versus a tech company that's can provide an exit faster, then that package allows you to attract the different type of supporter you need to build around this ecosystem.
Okay. Thanks, Pauline. Appreciate that. So Joao, last one in the panel. Real quick, can you, again, you've touched base about, you have an exciting pipeline. You've also noted that there are other investors interested in launching new funds in Cabo Verde. But then again, the market is quite small. We're talking about 500,000 people spread out over 10 islands in Cabo Verde. How are you sort of what are your intentions and what are your plans to basically grow the market, grow the pie, so that you have more, more companies to choose from as more entrants come into the market, as well as basically ensure that these are investment-ready SMEs? Can you just talk about how you navigate this market? I'm not sure if it's a challenge, but maybe you can just help us help clarify that.
Well, Charles, the market is small indeed, no doubt about that. As you mentioned, 500,000 people with limited scope for instance, for stuff like exportation. But there's still quite a lot to be done. And I believe that, in terms of investment readiness, what we can do is, and what we have already started actively doing, is helping companies become ready to invest or to be invested in, as opposed to waiting for them to be ready and then investing. So obviously we start getting involved with them at a lot earlier stage and help, and support as much as possible and guide the actual process of getting them to where we want them to be for them to be able to invest. And I believe that, as time goes by and knowledge increases, with financial literacy increasing and, a lot of the competency gaps within the SME fabric being mitigated, I think we are in a very exciting space. I'm pretty much looking forward for the next, 4 to 10 years within the private equity space in Cape Verde, because I think a lot will happen here. And again, going in early on some of these companies will actually allow you to then further invest either directly or via catalyze investment with a medium to long term approach kind of thing. So going in early will allow you to then reinvest in the future, and that in itself will help grow the pie, as you mentioned, in such a sort of challenging sized market.
Thank you. Appreciate that, Joao. Again, I'm very cognizant of the time. What I want to say is thank you very much, Han, Pauline, Gemma, and Joao, for your insights, for your presentations and the insights. Maybe what I can do is just give a quick wrap up from what I've heard about the investable first loss. This engagement, this project launched by USAID to launch the Investible First Loss, what I'm hearing is that because of the risks in the market, we should be looking at it, potentially expanding the coverage to make this a bit more sustainable. I've also heard comments about, the potential is there for more investments, such as in Mali, Sierra Leone, and that I'm also hearing, the creativity behind the FIs that we work with to basically address these challenges, ranging from, again, small size market, challenging, neglected, the gender lens, as well as, again, being in a global scale from ODS perspective, where there are a lot of risks in the ag sector. So if I missed anything, please let me know. And I do not see any questions in the box. So in the spirit of time, I want to say thank you to all the panelists. Feel free to stay if you'd like to hear the others, but I'm very cognizant of your time. Next up, if I can just share for the next agenda that we have, what we have now is the cash collateral panel comprised of Injara once again in Cote d'Ivoire, Lofty Inc. in Nigeria, Synergy Burkina, which will be presented in French in Burkina Faso. And we have, in fact, a startup, Najibi, who we've triangulated a partnership between them and La Banque Agricole in Senegal to basically launch solar pumps in the country. So with that, I would like to introduce Didier of Injaro to talk about the cash collateral project in Ivory Coast. Didier? Actually, let me share the screen. 1 minute, please. Share screen. Okay, share. Let me know if you guys can see the screen.
Yes, Charles.
Perfect.
Thank you very much,
Didier.
Charles. Yeah,
Yes.
Thank you very much for the opportunity. I'm not going to present Injaro. Joao did that already. So I'll get straight into what we did in Cote d'Ivoire. About the Boost Cote d'Ivoire Agricultural Program. It is a $1 million program that aims at providing funding to support the growth of a portfolio of 4 to 5 agricultural exporting companies in Cote d'Ivoire. And what we've been able to achieve is we've been able to raise 5 million for 4 companies in the cashew processing, fresh mango export, cassava processing, and shea nut processing businesses. The companies were able to meet only 15% of the $34 million export target, but they created 669 jobs, of which 500 jobs for women and 297 jobs for youth, surpassing on an average 5 times the job creation target. 1,885 farmers benefited from the program, achieving only 44% of the beneficiary targets. The beneficiary companies, next slide, please. Charles, next slide, please. Yeah. So the beneficiary companies were able to finance their working capital to sweat their assets for some and acquire assets to increase the production capacity for others. So you have these 4 companies in which we invested here in Cote d'Ivoire. Next slide, please. So in terms of challenges, obviously, the disruption in the logistics supply chain delayed by a lot the performance of some of the companies which were engaged in importing assets. And also we had a lot of challenge with, the profile of the companies, but more with that of the founders, the sponsors. Most of the time they have a very small teams and they tend to do everything by themselves, which is challenging for someone who's trying to put in a structure to help those companies grow. Obviously, there is a time element to this. The performance of the companies will require a longer time horizon to enable them to get to the full, I'll say, potential of these companies. In terms of lessons, we've learned that, after 3 years, despite the effort, the time, the resources we put into supporting these companies, they are still fragile. And, we need to continue to support the companies. Some of them, have been able to slowly strengthen their abilities and, being able to start the conversation directly with the financial institutions. But few of them still need some handholding to be able, to continue and to prosper. Obviously, as I was saying, we've been able only to realize 15% of the targeted export because of a lot of fluctuation in the commodity pricing, and the lenders will remain averse to cash flow based lending despite the proof. This is also because of the structure. I'll say there is this directive Basel III, which requires financial institutions to cover their risk 100 to 120%. And this is not going to change anytime soon unless the financial institutions decide to lend on the back of their own balance sheet, which is not obvious. So looking forward, we think that we're going to continue monitoring our portfolio, supporting these companies because they are going to be the pipeline for our next regional fund, and which we expect to launch next year to cover the Francophone and Lusophone countries in West Africa and Central Africa as well. One of them, is already thinking of being listed on the stock exchange in London. So this is we're going to have a look at all these developments and keep up, posting USAID and the program as well. So thank you very much, and looking forward to expand more when Q&A times come. Thank you very much for your attention. Thanks.
Thank you, Dadier. Really appreciate that. And I obviously, just coming from Cabo Verde, I got to tell you, I like how you're marketing the country for more investments. So next we have Lofty Inc. in Nigeria. Emma, are you on the call? Would you like to introduce yourself and Lofty Inc. and the presentation, please? Thank you.
Good afternoon, everyone. My name is Immaculate, and I'm speaking from Nigeria, Abuja. I represent Lofty Inc. Allied Partner. And today I'll be talking about...
Feel free to share your screen there.
Oh, sorry. I thought you guys be sharing the screen. Sorry.
Okay, just 1 minute. I'll do it. No worries.
Okay.
Just give me a few minutes, please.
Okay, thank you.
Can you see my screen? I have it up.
Yes.
Okay. Immaculate, we can start.
Okay, thank you. So like I said, Lofty Inc. is building the entrepreneurial ecosystem through funding, innovation, and support. And also, we facilitate impact projects in sub-Saharan Africa. And we have our partners, our sister companies. We have the Innovation Hub that supported investment readiness for our startup when we started this partnership with USAID and Trade Hub. We had about 47 startups, and Innovation Hub helped us support them in the investment readiness program, acceleration program. And also we have our US-based Lofty Inc. Capital Management that managed the 10 million venture capital fund, and Afropreneur, which is one of them, is a syndicate of angel investors in Africa. And the partnership with USAID aimed to raise capital for startups that used technology to improve food security in Nigeria. Most of the funds were investible first loss, but we changed to cash collateral to unlock working capital as the depreciation crisis worsened. And we were able to scale through that process when we changed the actual design of the project because of the whole depreciation of Naira and economic crisis. And what was our results? Next slide, please. Our results was we had a reduced in our targets after so much back and forth because of the worsened economy. And after that, we achieved 106% of the targets that was given to us for the private capital. As you can see my screen, I don't want to read it out. You could take a look at our targets and what we achieved at the end of the whole project. And apart from that, we had 20 up to 20 startups that we had that were invested in. 6 of them were aggregators, catfish farmers, and 6 were catfish farmers. 4 were into services, financial services, providing little loans using technology to smallholder farmers, and 2 were rice farmers. And however, we are pleased to take note that 20 of these startups continue to be active, showing adaptive resilience, and many launched their digital products and services, digital services, and these bodies well not only for about 47 startups, but for the 20 startups that were invested in both in equity and in debt finance. And apart from that, also for Nigerian food security in general. And apart from the whole cash collateral and equity funding, we were able to receive cash collateral funding from FCMB, one of the leading banks in Nigeria here that supports agricultural projects, and a microfinance bank, Safe Haven. And we've had an impact up to 57 increase in paddy collection, launch of digital training and advisory for 15,000 rice farmers. And our next slide. Our challenges. So for our challenges, we had a market depreciation, inflation, and collapse of venture capital funding. Naira-based grants, depreciating first loss value against USD and investments. And then the period performance required longer time horizon to account for the unexpected market challenges. Then our lessons. Of course, the currency, you can't predict that. You can't use Naira to dominate grants as first loss for USD-based investments, which made Lofty Inc. pivoted to cash collateral. And another lesson is the risk appetite. So Safe Haven and FCMB have shown us great partnership. They were able to measure risk appetites to fund high-risk startups managed by Lofty Inc. And our outlook is very, very great. We had improve cash flow to reinvent in operations of our SMEs, and rollout of improved seeds, climate smart agricultural practice, and digital tools. And right now, six out of the 20 startups are soaring high by going further to apply. To be in big agricultural and innovative programs like HEFA Agri Competition and the NSIA innovation program. So I would say the economic crisis and the rapid loss of venture capital funding made our forecast kind of a little bit shaky, because the grant was Naira based and it had a depreciating value as the first loss protection to American investors. Instead, we used the grant as cash collateral for Nigerian banks, and this would help the startups maintain operations, show resilience, and therefore prove to US investors that their capacity to withstanding severe challenges. And furthermore, we are pleased with FCMB and Safe Haven for showing an innovative spirit in investing in high-risk startup through cash collateral. And we hope to expand this model to support the venture capitals in Nigeria. And also, we would also want to show appreciation to Trade Hub. They've been of great support throughout the period, and also USAID for granting us for being part of this journey, and for being part of our success story with the startups. That's it. Thank you.
Thank you, Emma, for that presentation. Very much appreciated. Next up, we have who do we have? Synergy Burkina. Cyrielle, est-ce que vous pouvez présenter le fund? So I defer to you. I obviously I don't speak French very well, but I defer to you to please introduce yourself, the fund. Feel free to speak in French. Thank you.
Hi, Cyrielle. Let me just give 1 minute to let people know. So at the bottom of your screens, you'll see the interpretation icon. You can enter the English room so you can hear the interpretation if you need to follow her presentation in English. Thank you. Please continue.
Merci beaucoup, Ekwa. Vous voyez mon écran?
Thank you very much. Can you see my screen?
Oui, c'est clair.
Yes.
D'accord. Bonsoir à tous. Je suis
Hello,
Cyrielle
everyone.
de
I'm
Synergie.
Sayed from
Et
Synergy
merci
Burkina.
beaucoup, Trida, pour cette opportunité. C'est un plaisir pour
And
moi
thank you
d'être
for giving me
là
this
ce soir pour
opportunity.
présenter les activités de Synergie Burkina
I'm
et
glad to
également
share
partager avec
the
vous
activities of Synergy
les
Burkina with
impacts de
you
notre collaboration avec le WATI.
and the impact of our collaborations.
Alors, Synergie, c'est le premier fonds d'investissement d'impact au Burkina Faso,
Synergy
créé
Burkina
en
is the
2014.
first
Et la société est
fund
dirigée
that
par
was created in
Luxembourg. Elle emploie
2014.
16 personnes et a un
We
capital
employ
de
16
5 millions
people
de dollars.
with a
Alors, notre
capital of more
approche
than
se
$5
situe à
million.
4 niveaux, à savoir le financement, que je vais détailler plus tard, l'accompagnement, l'assistance technique et enfin le réseautage. Alors,
I'm
le
going to give you the
financement a
receipt.
3 grandes composantes. La première composante, c'est le financement d'amorçage qui accompagne les jeunes pousses dans leur projet de développement.
I also talk about networking.
À date,
There are three main
le
components
WATI
of
a
funding
pu implémenter
project,
2
and
projets
today
d'amorçage,
we
à
have been
savoir
able
le
to
projet
give
PACE qui a
the
permis de financer 9 entreprises et le projet IPAS financé par
two
l'Union
projects that
européenne
help us to
qui a
fund
permis de
9
financer 16
companies and the
entreprises.
impact project that has funded 16 companies.
Ensuite, nous avons la composante financement en capital qui est notre cœur de métier,
We also
qui
have equity
consiste en
funding, which is at the heart
investissement
of
entre
our
50
activities.
000 et 500 000 euros aux
Investments
entreprises. À date, nous
standing
avons pu
between
investir en
15
un
to
capital de 10
50 million
sociétés et nous
euros,
avons
and
réalisé
we
11
have
actifs.
supported 10 companies.
Et enfin, nous avons la composante projet éco.
Lastly,
Et à date,
We
nous
have
avons
the project and
implémenté un
program
projet,
component,
le projet FFS PME, qui
and
est
we
en
funded the
partenariat avec le
FFS
West Africa
SME
Trade
project.
Investment Hub. On a le Fonds agro-industrie qui est un
We
projet
have the
financé par
agro-industry
le
fund,
ministère des Affaires étrangères du Danemark. On a le projet
and we
PAX
work with the
financé par
Ministry of
l'AFD,
Foreign
l'Union européenne et
Affairs
une de
of
la
Denmark.
PDFC. Alors, comme je le disais précédemment, notre
As I was saying
cœur de métier,
earlier,
c'est le capital investissement. Alors, une fois que Synergie
the heart of
investit
our
dans le
project
capital des
is equity
entreprises,
funding, and
elle
once we
permet
invest
de
in
développer
companies,
les...
we help these companies to develop.
Je dirais une fois Synergie investit dans le capital des entreprises, elle permet
Once we
de
invest
développer leur
in
capacité de
companies,
production et par
we
ricochet
help them
leur
to
besoin
increase
en
their
fonds de
production
roulement
capacity,
que nous devons aller chercher auprès des banques. C'est dans ce sens que le Trade
and
Up
help them
intervient
receive loans from banks.
en mettant en place une subvention de 1 million de dollars utilisée
We
à
have
60% comme
made
garantie
grants
financière
of more
auprès des
than
banques
a
pour
million dollars
lever le fonds de
divided
roulement.
into,
Et l'autre partie du budget est utilisée en partie comme assistance technique pour renforcer les capacités
and the
des
other
entreprises
part of the budget
accompagnées
is used for
et
technical
également
assistance to
d'ouvrir les
build the
phases
capacities of
opérationnelles du
those
projet.
we are accompanying,
En termes de résultats, je dirais
as well
que
as
malgré notre
when
environnement
it
vraiment
comes
très
to recycling.
challengeant, nous avons pu réaliser de très bons
We
résultats.
have been
Pour l'objectif levée de fonds, on avait un objectif de levée de 7,9 millions de dollars. On a pu à date lever 7,7 millions de dollars. En termes d'exportation, nous avons pu générer plus de 900 000 dollars comme montant d'exportation. En termes de revenus des entreprises, nous avions un objectif de 10,8 millions de dollars et nous avons pu générer 12 millions de dollars. Et en termes de revenus pour les producteurs, nous avions un objectif de 3 millions de dollars et nous avons pu lever 2 millions de dollars. Comme producteurs touchés, on avait un objectif de 2008 producteurs. Nous avons pu toucher plus de 2400 producteurs, soit 52% de femmes et 12% de jeunes. Et en termes de création d'emplois, nous avions un objectif de 447 emplois et à date, nous avons pu créer 600 emplois. Concernant notre portefeuille d'entreprises, nous avons un portefeuille assez diversifié. Des entreprises qui évoluent dans l'agro-industrie comme Bioprotect, qui est dans la transformation de sésame, Rose Éclat dans la transformation des fruits et légumes, Kokuma qui est dans la transformation de riz paddy et Seattle qui est dans la transformation de soja. Nous avons également des entreprises comme Farm Expert qui offrent des services dans la santé, Agro-emballage qui est dans la production d'emballage, Palordé qui est dans la production de serviettes hygiéniques et d'autres produits à base de coton bio. Et enfin, nous avons la société SPH qui est dans la production de savon
Can you hear me? Sorry,
à base de beurre de karité. Pour un challenge, je dirais que lors de l'implémentation du projet, nous avons rencontré pas mal de challenges, comme la situation socio-économique qui a occasionné une prudence au niveau des banques qui étaient plus réticentes
we also have a company that produces soap using
dans la
challenges,
procédure
including this as
d'employement.
such, were very hesitant
Également, nous avons l'insécurité qui a vraiment restreint
when
nos
it
zones
came
d'intervention. Nous avons l'inflation qui a eu un impact considérable
to
sur les charges opérationnelles des entreprises que nous accompagnons. Comme leçon tirée,
having loans.
je dirais que
We
l'inflation
also
a
have insecurity, which
amené à
restricted our
encourager les
intervention prices we work
entreprises
with.
que nous accompagnons d'ajuster leur prix de vente afin de
We have
pouvoir
encouraged the
faire face à cette hausse de prix. Et également au niveau des banques, lors des procédures, nous avons remarqué une certaine lenteur. Donc, pour vraiment mitiguer ce risque, lorsque nous avons un besoin de financement, nous commençons la procédure vraiment très, très tôt pour pouvoir avoir le financement à temps et ne pas manquer nos opportunités. En perspective, je dirais que Synergie
to adjust
actuellement
their
est en processus
prices
de levée de fonds pour augmenter son capital à 6 millions de dollars. Alors, cette augmentation va permettre sur les 10 prochaines années à investir dans le capital d'une trentaine de sociétés, à diversifier notre portefeuille et à créer plus d'impact. Alors, nous sommes vraiment positifs sur ce point et nous espérons avoir les partenaires financiers adéquats pour vraiment permettre de nous accompagner dans cette volonté de création d'impact au Burkina Faso. Merci à tous, merci à Trida pour leur accompagnement.
Merci beaucoup, Cyril, for the presentation. As you can tell, that's where my French ended. Next up, we have Julien of Najibi. Just to give you a bit of a background, and Julien will be presenting a bit more about Najibi, but we triangulated this partnership with La Banque Agricole and to promote Najibi's technology in basically promoting solar pumps across Senegal, and hopefully after this project, Najibi would be able to scale across the region. So over to you, Julien, for your introduction, and yeah, thank you.
Hello, everyone. So thank you for the introduction, Charles. So I hope everyone can see the presentation. So as you just mentioned, this project is a three-party project which involves us as a startup company, La Banque Agricole as the main and we'll say almost the only bank financing agriculture in Senegal, and the trade of USAID as a catalyzer. So just to explain you nicely what we are doing, we are developing connected solar water pumps. Also, we do solar service centers, mainly offering cereal processing services, also ice and coal services in off-grid areas for women. And also we have a training and incubation center for solar entrepreneurs, which train and incubate 50% of women. And also we serve our other activities by providing human resources. So this partnership is one of, I would say, in sub-Saharan Africa, it's the only one I know which include the local financing into agri-tech and clean tech solution financing. So the challenge was to involve the Banque Agricole into financing directly the farmers by providing a technical and commercial solution that we are designing as a Najibi company. So our company is we are very young people. We develop and manufacture most of the technology we are offering to the market, especially the IoT cards, all the digital platform and application. We do the assembly of solar water pumps, solar inverters, and we offer to our customers everything from A to Z, everything they need for solar and water pumping. So on the project side, we are targeted 7 million private capital as average. We only succeed to achieve 2 million because of the delay of the second credit line. We included. We also secured 100 jobs. That does not include the seasonal jobs that are almost 2,000. And also we reached 15% of women participants. Maybe our target was pretty high at the start because we realized that only 10% of farms are owned by women on the ground. And also the participant was okay with 1,000 people. Our stock, which is to say that our pumps stock, because of the second line credit limitation, was limited. So we a bit downscale our operation not to create too much frustration. For the hectares improved, we reached almost 200 hectares. What we realized during the M&E study, monitoring and evaluation, is that 50% of the crops surface are increased because of the solar water pump, so which is very interesting. Also, we sold 90 pumps to 80 customers. As I say, we face some deceleration on the project because of the instability, the credit line delay, which was partly caused by the instability. But altogether, we can see that this is a very promising market and project. We had these farmers that really increase their yields by increasing the surface they are producing vegetables, and also they know they master the water. They really master the water, as to say that it's key to succeed in agriculture. It's the first key and the main one if you want to succeed. So when the water is stable, then you can really forecast your production. So now the challenge is, of course, as we all said, post-COVID, inflation, some funding delayed, but what we can also, one of the main challenge we face is that most of the women farms are less than 1 hectare. And for solar water pumps, the one we are offering, they were not really designed for those small, very small farms. So that's something that when we look at the insight and the outlook could be interesting to develop. What we learn is that there is very high demand. Of course, financing is always a challenge, but by including local financing, we were able to tackle this challenge. And now we have a project that delivered real impacts, real output. So the outlook for us is to develop our pipeline by reaching more surface served. We already have done 700 farmer application, and we aim to reach 1,000. We also are going to install another 100 pumps, 110 pumps this year, and to reach 200 pumps by the end of the year. We are raising money right now, $2 million, to scale the model and also to grow into other solar water pump size for farms from 5 to 10 hectares. And also we are also looking for neighboring countries like Gambia, because in Senegal, we are in south of Senegal, so Gambia wouldn't be a challenge logistically speaking for us to serve. Yeah, that's it. Thank you.
Julian, thank you very much for that presentation. And with that, I think you're the last presenter for the cash collateral panel, panel 2. I will now open it up for questions, and I will start. So please, if any of the attendees have any questions, just kindly just type them in, or perhaps you can just raise your hand if that's too much. But due to time, I'll shorten the number of questions that I have. And my first question really is more about cash flow-based lending. When we discuss about the structure of this cash collateral, the goal for the banks is to really focus more on the cash flow structure of the SMEs that you're requesting them to support working capital, and that you would leverage this cash collateral first off to offset the collateral risk, but then they would shift their focus on the fact that these SMEs are indeed generating cash flows to repay off these working capital loans. Can you just talk to us about whether that succeeded? Are banks more open now to really focusing more on the cash flow on the cash flow of the company, or they're still very restricted to the request of of oversized collateral? And I'll start with you, Cyrielle, in Burkina Faso.
Ok, merci beaucoup, Charles, pour la question. Alors, à notre niveau, je dirais
Thank you very much, Charles.
La Société Rose Éclat
I would say that
financement
we have been able
du cash
to
collatéral. Et la banque n'a pas demandé de
raise funds using cash collateral. But for some companies,
dans le cas de Synergie, il ne s'agissait pas de
or with Synergy,
utiliser des prêts basés sur le flux de trésorerie, comme tu viens de le dire, mais plutôt de se baser principalement sur la garantie financière pour octroyer de manière diligente
we mainly based ourselves on the financial guarantees to be able to receive loans and meet up with the guarantees that were being asked.
Mais les différentes banques avec lesquelles nous avons collaboré pour lever ces financements, en plus
Several banks with which we collaborated to raise funds, in addition to the 40% which we provided, the bank requested a guarantee worth 70%.
Ou de sensibilisation plus poussée avec les différentes
and we
banques
had to raise more awareness with
afin de leur permettre de mieux comprendre les objectifs
the various companies we're working with for them to better understand our objectives.
Sorry, there was a bit of a technical difficulties there. Okay, thank you, Cyrielle. Sorry, there was a bit of a pause there because of technical issues. Thank you. Now to you, Emma. So, as you were launching this cash collateral, were you able to convince the banks, the MFIs like Safe Haven, to focus more on the cash flow strength of your startups?
Thank you, Charles, for that question. Yeah, the convincing was a little bit difficult, but however, they fully engaged with the SMEs in cash flow based lending. Additionally, measures were implemented, provided the targeted training for bank officers and assessing cash flow viability. And also, there was an introducing risk sharing mechanism and offering performance-based incentive, which further encourage banks to adapt this approach. And also, there was, let's say, from this approach, there has been demonstrated successful cases whereby the banks wants to apply this method and also collaborate closely with the SMEs and also support them in whatever they are doing.
Thanks, Emma. Appreciate that. Julien, over to you. Were you able to convey the cash flow strength of both the farmers and also of Najibi to LBA with the hope of accelerating the applications as well as potentially unlocking funding for you to buy the equipment, the mission critical equipment for the farmers?
Yes, that's the question. I mean, there is a market, a huge market. We all know population is growing. We need to eat every day. We need more vegetables, more agro production. But financing is the bottleneck. So we managed to unlock the financing for the farmers. The trade-up was really a key to unlock it and to access new financing for the bank and also grant financing and some other warranty for the loan. But what we realized that for the suppliers of technology, that was a bit more difficult. So probably we will need to put more attention into the technical provider, especially when they are locally based. So they need more warranty to access this financing. or they need also access to capital, to equity, to balance the ratio and to reinsure the banks. So that's something that has to be developed. But I mean, this is a process. So now that we reached the first step, which is proven that it's working, the impact and outputs are huge for every stakeholders, that we will probably need to increase the support for the banks and financial institutions to train them and to explain them how they could really organize those support to SMEs.
Thanks, Julien. Appreciate that insight coming from the perspective of the startup. And I think we have one more, Dadier. I think you were the first one to really close the cash collateral and to really work with these turnaround companies to basically, again, convince Witty Finance and others that it is worth to really provide them with working capital and focus them on cash flow-based lending. What are the challenges? Did it work? Can you share with us the insights?
Yes, thank you very much, Charles. Well, it worked for us. To be honest, it worked for us. But we had to muscle in, and, use our relationship with this institution to be able to get the idea of a cash collateral through. Like I was saying previously, we have that directive Basel III that requests the financial institution to cover the risk 100% or 120% even. So what we did to start with, to be able to get the companies to have a conversation directly with the financial institution, we worked into 3 phases. The first phase was to create the relationship. And in that phase, we provided 100% cash collateral, which was still not easy because they were asking for, balance sheet, business plans. And I told them, you know what? I'm providing you 100% cash collateral. This is free money for you. You not only are fully guaranteed, your loan is fully guaranteed. And on top of that, you are making interest. You are collecting interest. So I've already done, the screening of these companies. So just give the money to the company, and then you're going to observe by yourself, are they capable of reimbursing your money? So that was the first. The second phase, we started to put the sponsor of the company in front of the financial institutions themselves, because most often they don't even know how to articulate their fundraising case. And then thirdly, we reduced the amount of collateral, cash collateral. So we provided part cash collateral, and the company, presented their cash flow to be able to raise funds. And we are at that stage. And we hope that, after the program, the companies will be able on their own to go to speak to the banks, because they would have seen, the company's ability to generate cash and meet their financial obligation vis-a-vis the financial institution. So this is how we work it out. But, as long as, you have that directive, and as long as the financial institution themselves do not use their own asset, but they also go out to raise money, from their customers, from the central bank, et cetera, there'll always be a need to protect or to cover their risk, and it's going to be challenging. I think that the only way for the SMEs to get around this is, to be profitable. There is no such guarantee, but a profitable company to put money into. Thank you very much.
Thank you, Dadier. And I like the fact that, you leverage your relationship management, you kind of muscled in. I'm going to use that term. So Immaculate, as you were, very specific to Lofty Inc., not Lofty, Lofty Inc. Can you just talk about how you managed to convince your partners, your field partners in Nigeria, to really support and provide working capital to these startups, literally with no assets, hardly any experience in the market, unprecedented experience, especially in the context of Nigeria's economic deterioration? How did you manage to muscle in and basically convince them to work with you on this cash collateral?
Thank you for that question. So, Lofty Inc. managed to convince Safe Haven and FCMB to provide them working capital for the startups by utilizing cash collateral to mitigate the bank's perceived risks and by pledging cash collateral. So this made an effect in reducing the financial risk for the banks and making it more attractive for them to lend to the startups. And also this approach demonstrated Lofty Inc.'s confidence in the startups' potential and also provided a safety net for them, where it ensured that the banks had all fallback in case of default, which was practical for us and something we saw firsthand. And also, additionally, Lofty Inc. Has a track record of supporting and successfully scaling up startups, be it agri-tech startups or any other startups. So we have that track record of helping to build trust with other financial institutes and further convincing them to extend credit to these innovative enterprises that we've been working with. And I would say we've had up to like 90 to 95% success since Lofty Inc. started this impact helping out in startups in the impact space and social impact space. So that's it. Thank you.
Thanks, Emma. Now I have a very specific question with regards to, again, the challenge. We've spoken a lot about the challenges, very unique challenges here in West Africa. To you, Surya, with regards to, to your cash collateral, I know you've engaged Societe Generale, for instance. How did the insecurity in some parts of Burkina Faso affect the way you used cash collateral or negotiated with the banks on taking the cash collateral?
Okay. Merci beaucoup, Charles, pour la question. Alors,
Thank you for the question, Charles.
Vous le savez tous, le Burkina Faso fait face
As you all
à
know,
une situation d'insécurité depuis
Burkina
quelques
Faso is facing a lot of insecurity
Cela a
for
vraiment
some
beaucoup
time now,
impacté l'implémentation
and
de
this has had a lot of impact
bilatérales avec les
on our activities.
Et déjà, au niveau des banques, je pense qu'avec l'incertitude du
At the
marché, les
level of banks, I think
procédures de
with the
levée sont
uncertainties
devenues
in
plus
the
lentes,
market,
avec plus de
it's
conditions
difficult
et plus de
to
rigueur.
raise
Certes, on a
funds
vu
because there are
déjà
a
échangé
lot
avec
more
le
conditions.
financier à lui expliquer un peu nos objectifs et l'objectif de l'implémentation d'un tel outil
We
de
need to explain our objectives and the
on n'a pas
objectives
vraiment
of
facilité
the
les choses. Nous
implementation
avons
of the
vraiment
activities.
les rigueurs, les conditions, la lenteur dans la procédure de levée de fonds. Et certaines
There are
entreprises
lots of
ont même revu à
conditions to
la baisse le
fulfill,
montant
and there are a lot
levé
of
à cause
bottlenecks
des
in the
conditions
procedures.
demandées par les banques.
Some banks do not even give the amount we ask, and we have been obliged to reduce these amounts.
Thank you, Surya. I appreciate that insight. Now, going back to Najibi, you mentioned, partners, you're raising money. Julien, can you just talk about what would really, if you can do a new partnership, not necessarily in Senegal, let's just say that, you mentioned maybe the Gambia. Lessons learned, how would you structure this partnership with a bank?
Well, that's interesting. Maybe we will look to maybe design a SPV or something that would make the financing much more fast and to probably raise much more collateral or warranty for the SPV itself. so that we could include the local financing, like the local banks, and serve the farmers better. That would probably be the key to fasten the process and to ensure that every stakeholders would find what they are looking for. So that's a way we are thinking about right now. Yeah, not only for Gambia. Yeah, but that would be a case.
I appreciate that. Thank you. With that, I want to open it up to the audience if they have any questions. I'm not seeing anyone typing anything. Is that correct? We can move on.
Yes, we can. We don't have any questions from the.
Okay, thank you. Hopefully we're not boring anyone. So one, I'd like to again summarize just the insights on this cash collateral. What I've heard is that it's worked for many of you despite the challenges in the market, and I think we can look forward to maybe just using this tool, in the future with new types of companies or new challenges in the market. With that, I would encourage you to stay for the third and last panel, which is about the data collection, our data challenges involving two of our advisors, as well as our partnership with a guarantee fund. I'd like to introduce the three panel briefly. We have Nish Deep, based in Nairobi. Thank you very much. I know it's quite late there. And you'll present the AGF, the partnership, as well as your solutions with regards to improving the data collection and distribution. We also have two advisors, Cross Boundary and Open Capital, talking as well about how they raise the capital for the SMEs and how they develop relationships with these SMEs to share the data throughout the 2 or 3 year partnership. Over to you, Nishdeep, to present yourself and to also share your presentation.
Thank you, everyone.
I can if you'd like me to show it. No worries. Would you like me to do it?
Sure.
Okay.
Yes, please.
Sure. Just 1 minute. Okay.
So just as a quick introduction, my name is Nishdeep Sethi, and I'm the Group Director for Structured Finance at the African Guarantee Fund. And very happy to be here to hear all of you so far and, the impact that the Trade Hub has had with all of its collaborations. So just a little bit of background on African Guarantee Fund, and then I'll talk a little bit about our collaboration with the Trade Hub, and then obviously about lessons learned and challenges. So we're a guarantee fund, and our sole mission, I would say, is to provide guarantees to financial institutions to on-lend to SMEs with the agenda of closing or contributing to closing the SME financing gap in Africa of $330 billion. So we provide guarantees, partial credit guarantees, and we also provide capacity development. And we currently have partnerships with about 243 financial institutions across 43 countries in Africa, and we've been in operation for about 12 years. So we work mainly through the SMEs, through the financial institutions to reach the SMEs, and our partnership with the Trade Hub was very, I would say, timely. We use guarantees really to mitigate or to share risk with financial institutions and lenders. And what we've seen in our experience is that the guarantees are a very supportive and effective instrument to use during a time of crisis. And when we partnered with the Trade Hub, it was for providing guarantees to SMEs during the time of COVID, when a lot of the SMEs that were thriving before the COVID pandemic hit, and they had good and strong financials, but because of the economic effects of the pandemic, we saw that they were struggling and they required some restructuring. So we were able to create the COVID guarantee or launch the COVID guarantee. And the 2 million that we received in funding was in a very unique structure for us. It came in the form of a first loss grant, which we hadn't done before. With another partner, and it was very instrumental to help us to raise additional funding from our existing partners to support this COVID guarantee. So we were able to raise an additional capital and then go into the market with a target of unlocking up to 180 million US dollars for SMEs that are struggling or trying to start up their business during the COVID period. With the support from the funding that we received, it was also instrumental in helping us to reach a lot of the countries that perhaps we couldn't have gone to without the additional risk support that we had from the first loss grant. So at AGF, along with the COVID guarantee, we have other thematic windows. For gender is we're the implementing partner for the guarantee for growth for the FIA program. So I was very happy to see the She Equity team on the call because we work directly with different BDS and organizations that support women SMEs, and also to link them with the financial institutions to unlock capital for financing for women. We also have a green and climate window, which focuses on supporting SMEs that contribute or participate in the green market and are contributing towards growing the green economy. So the funding that we had from Trade Hub was spread across all the different sectors that we track, including agriculture. So it was very instrumental in helping us to gain more, to grow, to fundraise, and also then, using that capital to leverage and issue more loans. So against the target that we had set out, and I think this SME lending target was supposed to be 80 million, but anyway, we were able to really surpass the target because of the demand that we saw in West Africa from the financial institutions to support these SMEs that they had existing in their portfolio and the ones that were applying for new loans during the crisis. And the type of businesses that were emerging were very interesting and very aligned in meeting the market needs during the crisis. So we were very happy to see that we were able to surpass the targets and really work with a lot of partners and a lot of SMEs ranging from micro to medium to really support their businesses during this period. In terms of some of the challenges, I think for us as a sort of fund of funds, as a guarantee fund, and we don't interface directly with the SME, the way that we and because of the leverage that we're able to provide from the capital that we raise, the leverage effect, which is almost 10 times, we see that the amount of loans that we unlock and the amount of SMEs that we're able to reach are quite significant. Specifically, we've reached over 40,000 SMEs since inception of AGF. And even in this program, we were able to reach a significant number. So since the guarantee is actually considered to be a silent guarantee because of the moral hazard, it's considered a moral hazard when an SME knows that up to between 50 and 75% of their loan is actually being covered by an entity outside of the bank for development purposes, there's a higher chance of default. So we try to keep it as a silent guarantee. And so for us to be able to reach the SMEs is quite unique in how we calculate our indicators on each of the KPIs is also based very much on proxies and our internal methodology. So we use proxies to estimate the impact data, and we establish these proxies through surveys and carrying out surveys and also using industry standards. In this way, we're able to use statistical analysis to be able to determine the estimated impact in terms of numbers of jobs, exports, sales per SME. But the data that we're able to collect directly from the financial institutions that the financial institution collect anyway, that data is much more easier to get in terms of real-time data from the banks, because when an SME goes to a bank to open an account, they provide a certain amount of data, and the bank doesn't go beyond collecting the data that they require. And even if they do, that most often than not, the systems of the banks are not customized to enter some information like perhaps gender, and when I say gender, if we look at a wider definition with the 2X criteria, which is what is used under the FIA program, it's not just owned and led. It goes to employment, it goes to the type of products. So you find that these other criteria are not reported on because the banks don't really collect that information. And if they do, it's not able to go into a system. And what we require from the banks is a system generated report on all the loans and all the loan features under the guarantee. So this is, I would say, a reporting challenge that is there, but we are using different types of technology and working with different types of partners to ensure a more direct approach in collecting the data from the SMEs, where we're not the main, we're still able to maintain or avoid facing the SME directly. So it's just about also using capacity development to work with the banks to make them understand the importance on reporting on certain ESG criteria, which would actually also help them in the longer run. So with the capacity development that we work with the banks to help them to collect this data, also working with the SMEs through different organizations to again, make them understand the importance of collecting this data, even in the most basic form. And then obviously using some technology to be able to make the whole process more seamless, more real-time, and more accurate. So I think in conclusion, just to say that, for AGF, we're at a point where we're really using the guarantees to lower perception risk that's around SMEs, and maybe even more so SMEs in the green space and women SMEs. So I think after 12 years, we can say that we've been able to demonstrate the real effect, or the positive effect, of the guarantee as an instrument to use during crisis and even otherwise in riskier countries and sectors, to be able to increase access to finance for those sectors and countries. And our position at the moment is that we want to scale our activities. We want to be able to do more, and then as we do more, improve also the processes and operations of the way we do things, including data collection and impact reporting. So I think I'll stop right there. Thank you, Charles.
Nish, thank you very much. I know it's quite late there. Really appreciate the presentation. Just to let everyone know, again, we're going over time, partly because of technical issues as well. So I really appreciate your patience for staying with us. We do have 2 more presentations from the advisors, and up next is cross-boundary. Ali, if you don't mind, just because of the time, if you don't mind just giving us a very quick 5-minute presentation, please. Thank you. Over to you.
All right, thank you. 1 second, let me share my screen. Do let me know if you're able to see my screen.
Yes.
Great. Hi, everyone. My name is Ali Jure. I'm a principal across boundary, head of our investment activity in Ghana. Yeah, excited to tell you about the partnership with the Trade Hub and some of the accomplishment and lesson learned under this partnership. So Cross Boundary was mandated under this program to really support SMEs right to access private capital. And in doing so, just wanted to achieve a number of objectives that are aligned with the Trade Hub objectives: job creation, trade facilitation, employment for youth and women. So in order to do that, we looked at a number of sectors that cut across, that are more aligned with the Trade Hub priority sectors, so agriculture, light manufacturing, logistic and trade. And the scope of what we did was really to provide end-to-end transaction advisory, so making sure that companies are ready, investor ready, in order to fast track communication and facilitate investment. In order to do that, we benefited from a 1.5 million co-investment, and through that, we're able to mobilize about 14 million by supporting 6 companies to close, I would say. Otherwise, we built a pipeline worth over 160 million. Some of them did not close during the timeline that we have for this program, but overall, we got approval from the Trade Hub to really support 19 companies. We touch on some of the lessons learned here, but at the end of the day, we mandated to support 5 companies and ended up supporting 6. And we met and exceeded a little bit the target that we had under this program. To zoom in a little bit on some of the companies we support, I won't go through all of them, but just wanted to kind of zoom in on 2 particular companies. The first one is Winich Farm in Nigeria. When we approached this company, they were doing their first fundraise, they were struggling a little bit to raise. When we approached them, we were able to get them be investor ready, essentially telling their stories to investors. And once they got some legal documentation term sheet, we supported them a great deal, able to negotiate the best terms from them. And eventually they're able to close the first time. And then they also later on went to raise an additional run as well and came back to us for support. So after closing the round, they were able to accelerate really the activities across Nigeria and are now considering expanding even to East Africa. The second company here is Africrea that rebranded to be called Anchor. This is a company in Cote d'Ivoire that really aggregates, is a platform for African design, if I can say like that, to aggregate their product and sell it to a global audience. When we approached this company, they were struggling to understand their core market across West Africa. Investors wanted to understand the storyline, wanted to understand how they're going to grow in some of these markets. So when we came in, we interviewed a bunch of their sellers just to really get to the bottom of what is it that make them use the platform. And through that, we're able to actually develop a route to market that contributed to provide comfort to a number of investors that decided eventually to invest. And this is just 2 of the stories that I can outline all the 6, but because of time, we can just move on. So as we provided this support to some of these companies, we're able to meet and exceed the target across some key impact parameters. The 2 I wanted to flag here is really exports and domestic sales. So we're talking about Winich earlier. We've seen them skyrocket their sales number, and Africrea was one of the partners here that was also able to push their sales number here. And as we looked at what it means for supporting some of these companies, we see that the support we provided really achieve a number of objectives, whether it's food security. We have 3 companies here that play in that space: international trade and regional trade. We have about 5 companies that play in that space. Youth and women. Africrea, about 90% of the sellers. I think we have over, by the time we supported them, I think they had about roughly 2,000. Today, I think they should be around like maybe 6,000 or so, if not a little bit higher. So really providing a platform for women and the youth as well to be able to sell their products to international buyers. And technology, we need which is like AgTech, Lori, Trade Tech, and then Africa as well. Maybe finally to close here, we had a lot of some challenges obviously as we're implementing this program and some lesson learned. I will categorize some of the challenge as macro and some as related to the dealing of the process itself. But I think what make this program a little bit challenging on our end was really the misalignment around some of the impact data. So what happened, we communicated, some of the requirements, some of these companies how we're starting, and then I think midway through implementation, there was some requirements that changed regarding the M&E component of it. So going back and collecting some of that data was a lot of like back and forth. But eventually we're able to align interests here and collect some of this information. And I think, the investment process as well as an advisor, really what we can do is facilitate the process for the investor. So really addressing their questions, making sure that we can minimize the number of questions they have or concern they have. But once we do that, the process is their process and we don't have that much control over that. So we've seen a number of transaction drag, and yeah, that's something that certainly was a bit challenging. I think in light of that, we realized that, it is important to start the process earlier to give us enough time to complete that process and engaging with a number of investors as well. And as far as the data is concerned, aligning on the requirement for the program from the get-go is important so that we communicate that transparency to the companies that are benefiting from these supports to minimize friction. So anyway, this was a very successful partnership. We really thank the Trade Hub and USAID for this partnership. It also allow us to deepen our work in the region, and going forward, we foster additional relationship that we can continue to take on a commercial engagement. But yeah, thank you.
Thanks, Ali, for your presentation. And our last presentation for the day is coming from Jean-Joël, who will be presenting Open Capital Advisors. Jean, are you there? I'm going to share the screen.
Yes, thanks, Charles.
Okay.
All right, so I'm going to get straight into it with the introduction. Hi, everybody. My name is Jean-Joël, and I'm representing Open Capital. Right, so on the next slide, please. Right, so we worked, yes, I can see it, yeah. So Open Capital is a Pan-African management consulting and financial advisory firm. We're headquartered in Kenya, and we have a growing representation in West Africa. I'm actually based in Abidjan, Côte d'Ivoire this afternoon. Right, so over 2 years, we collaborated with the Trade Hub, and that was to support SMEs in their fundraising efforts. Right, we partnered with them, focusing mostly on SMEs operating in small or rather small states. So those states do not really have investment coverage. So what we had to do was to work with them, improve their investment readiness, and help them access or unlock those funding. Right. As advisors, we supported them in meeting investors' expectations, for example, of investor materials, negotiations as well, and problem solving. Right. In total, we worked with about 20 SMEs, and that was in 7 countries, including Sierra Leone, Mali, and Burkina Faso, as you can see on the slide. Thanks, Charles. Right. So we were successful in raising capital for 4 companies, and those are the ones on the slide. We have Uduma, Planting Naturals, Easy Solar, as well as Smiling Through Light. So this is a quite diverse set of companies, operating in 3 different sectors. That is agri, wash, as well as energy access. Right. So maybe I can take a few seconds diving quite quickly in one of those companies, right? That is Uduma. Uduma is an example of a unique social enterprise. They are in the sector and they operate in high-risk environments. So the company actually operates in Mali and Burkina Faso in areas that are very high risk. And through the local engagements with the different, I would say, leaders and key stakeholders in those areas, they were able to install pumps, water pumps that serve about 300,000 people living in those remote areas of Burkina Faso and Mali. We came in working with, rather when we and started working with Uduma, they were already in talks with investors, and the investors needed them to refine their unit economics as well as their impact story. So we did the work with them, and at the end of that, they were able to raise 1.7 million in US dollars, and that was to install, and that is to install 200 pumps, and we'll be reaching an additional 10,000 people, and that is in the mean term. An interesting fact about Uduma is rather the focus on women. We also in households in remote areas, the burden carrying water or going to fetch water is usually on women and girls. And Uduma business model actually take into account, the women. One, installing pumps will actually reduce that burdens on women, but it will also, but they also recognize women as part of the business. They give them those responsibilities. Specifically, women perform the role of cash collectors. So they will be collecting money when people come, fetch water from the pumps. Yeah, I will just stop there. The plan was to share a little bit more on another company. Given the time, we will end there, right? So I shared on the impact of Uduma, and pretty much all these companies have a strong impact potential, right? And we expect the funds raised to contribute to this impact, enabling about 9 million US dollars in sales and 750,000 US dollars in exports, as well as job creation. We started to monitor.
Hey, Jean-Joel. Are we having network issues? Okay, you're back.
I'm back. Sorry about that. Can you hear me?
Yes. Yes, you're good.
Yeah. So we started to monitor the impact, and we will continue to do so and report to the USAID, and that's after the trade up. It's worth to mention that OCA actually closed the partnership with the trade hub in April 2022, and that left us with about 2 years to perform, right? Which was extremely difficult given the mandate. There was also the post-COVID era. There was hyperinflation and some political crisis in the countries we were targeting, right? So all these challenges.
Hey, Jean-Joel, I think your line dropped.
Yeah. Yes. And then if there are many questions, I can address them as answer those questions. Yeah.
Okay. Sorry about that. Sorry for the technical difficulties, but for your presentation. And that literally ends the presentation. We do have a few
dealing with over 40,000 SMEs, and where our mandate is impact, and to have that scale effect, because yes, there is the the one-on-one grant funding that goes directly to the SME, but our main agenda is also to empower the financial systems within these countries that we're operating in. So we also use technology, as you said, and we're working, as you said, on our internal systems that will allow us to interface our system with the bank system, and then also have the bank channels, mobile phones, surveys, whatever works well in the region, as well as languages, different languages, and work with different consultants and partners that are experts in collection and surveys and samples.
Thanks, Nish. I really appreciate that. Looking forward to the rollout of that technology, especially as it impacts your relationship with future stakeholders. I just want to manage the time as well, so I'm just gonna have two more questions, and I think everyone's eager to just go home and go to sleep. So cross-boundary, you spoke a lot about about what you've done for the SMEs, and I think as you begin to deepen your engagement in the region, can you give us an idea of what services do you think is needed, if at all, for the companies that you work with to raise money? How can we make that capital that you raise for them really work out or be optimized for performance? What services do you think you would need, or any advisor would need to give to such SMEs?
Yeah, thanks, Charles. I think what we realize is that typically a typical transaction advisory service, right, will not work for the companies that are in our region, right? Because yes, you come in during the life cycle of the fundraise, right? It could be anywhere between 15 to 24 months, depending on the transaction. We had to provide capital plus, or we had to provide advisory plus, right? What do I mean by that? Some of these companies, they need a legal advice. So whenever we receive term sheets, we have to leverage our in-house counsel to be able to provide guidance on, hey, listen, this is market rate, this is not market rate. This is how we should be negotiating this. This is how we should be pushing back against that, right? And on top of that, we're seeing ourselves becoming an extension of their team. So whether it's recruitment or whether it's just strategy, even for growth, providing that sort of additionality. So when you're coming in, and I mean, because this is really a relationship business, some of these companies, potentially see you as a partner and then come for some of these advice. And in order to kind of, make the relationship successful, you are quote unquote incentivized to kind of support them. So yeah, I think we'll see that to be a trend, not only in Francophone or West Africa generally, but across the firm, our colleagues working across the continent, we're seeing that to be more and more of the need.
Thanks, Ali. Appreciate that. Looking forward to evolution of support, really. And speaking of which, Jean-Joël, you mentioned about challenges with investment readiness. I think everyone experienced this challenge with the funds as well as with Ali, as Ali mentioned. And you spoke about maybe boot camps for some of these very challenging markets like Sierra Leone and others. And then here we have the issue of data collection or data delay, et cetera. Can you just walk me through in terms of the boot camps, what specific support or ideas do you have? Do you think the SMEs that you've worked with, the ones that were not investment ready, what sort of support do you need to enhance their M&E strategy going forward?
Yes, thanks, Charles. And specifically on the ones that did not raise, one thing that we've seen is that the companies have an idea of data, the need for data, but they don't really, have the capacity to actually keep track of data, right? And Smiling Through Light is an example, right? They know the data that they need to present, but they don't have the capacity in terms of people, but also in terms of equipment. The challenge is that even if they have some sort of capacity, they will need, expertise, some expertise, especially in the areas of CO2 emissions, because we realize that quite a lot of the companies, even Easy Solar, does know, but they were not able to let's say, the CO2 emission savings, right? So that's where comes the idea of having those boot camps, right? Where we will have those SMEs as well as investors, but also more importantly, the experts in, I would say, information services, right? As well as energy experts that will help, with the calculation of these indicators. On top of that, how they will be able to track, the data that they need to present. So that's the idea that we came up with. We will need support implementing such, and yeah, it's in the air to discuss with you and other organizations to see how we can, put that in place.
Thanks, Jean-Joel. Just to sum it all up, I did hear a lot of, very interesting things in Outlook, leveraging everything from new technology, using it just to get that granular detail for fund investors that might be very interested, at the granular level in terms of the impacts, et cetera, from the SMEs. Also, again, from cross-boundary from Ali and from you, Jean-Joel, engagement with the SMEs, their investment readiness, their also ability to really communicate across the aisle to the fund investors, and then packaging it all in to make it all very sellable, marketable, and understandable for investors. Really appreciate that. We're very close to the end. We have one last, I'm going to give the floor to Kathleen of USAID to provide the closing notes. Again, thank you, panelists, for your time, for your patience, for these presentations, and for these partnerships. Over to you, Kathleen. Oh, Kathleen, you're muted. Are you, Nana? Can we perhaps help Kathleen?
I think it's from her end. It might be the earphones, because I can hear the muffling of the speaker.
I see. Kathleen, your
earbuds
might be your headphones. No, we still cannot hear you, Kathleen. Are you on, I think you're.
Okay.
Kathleen is going to come to my computer and speak. Charles, give her a second.
Love it, Sizway, to the rescue.
There you go. Yeah, I'm not sure. I don't want to take you in case I'm plugging you to stuff. Okay. Oh, if you want to go on camera, I'll put you on. There you go. You're on camera.
Okay, can you hear me now, everyone?
Yes, thank you.
Okay, thank you. I'm sorry about that. I just want to say a quick thank you to everybody. First, thanks go to our partners for making the time to speak to us about the lessons learned, the commitment you have shown throughout these past few years to make finance happen in West Africa. We really, really appreciate it. And we look forward. We thank you for the lessons you have shared. We've taken notes, and we look forward to improve our collaborations with you and with other partners in the future. And thank you for Trade Hub for putting this amazing event together. Yes, we went over time, but it's so interesting that everybody's still hooked on. We made some questions for later, and we will share those questions with you. But we really appreciate the time you've made and your commitment to this partnership. Thank you very much, and have a lovely evening. Bye.
Thank you. Thanks, Kathleen. Thank you, everyone. Nana, over to you.
Hey. All right. Thank you all once again for joining us for this.
All right. We're all having technical difficulties, Nana.
I'm still here. Can you hear me? Hello? Can you hear me?
Yes. We're having issues with your connection.
Oh, sorry.
But yes, over to you to close it.
I'll make this quick. So thank you all again for joining. Just to let you know that we will be sharing a recording and also sharing PDFs of all of the presentations so that you can have those. If you have any questions, you can also send those to us by email. You should all have my email address, and I will pass them on to the relevant person to get back to you. Yes, so that's it for the event, and thank you all once again. You can all drop off now.
Thanks, guys, for all of you who stayed. Thank you. Nice working with you all. Bye. Thanks, Ruzia. Thanks, Kyle.